Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading. We look at hot spots in the markets for today. It is Monday, February 28th, the last day of February. Holy cow, we're out of February. My name is Todd Rich. I'm with Nadex with me, Brian Caprice from Keep Trading Simple. And if you can't tell from my voice, I am a little under the weather today. I can't believe I've made it this far, and somehow I think in fact, I know I picked up the coronavirus. All vaccinated up, doing everything right, masking up, socially distancing, and still somewhere, somehow, um, I managed to get it. So, not fun. Definitely not fun. What do we get now? Talking about not fun. There's a lot of not fun going on in the world today with the uh, escalating challenges with Ukraine and Russia. Uh, the most recent news, because I'm sure you've been following all of it, Brian will dive deep into it, but the Russian ruble is absolutely getting decimated. Uh, their financial markets are getting hammered to the tune where they shut down the Moscow Stock Exchange entirely. I don't know when they're going to ever open it back up. Uh, to combat that, Putin jacked up interest rates in Russia from 9.5% to 20%. They've got some challenges that they're having to battle. Now, what are we seeing in the markets over here? How is this impacting U.S. markets? Our trading opportunity. We are seeing U.S. equities looking to open down about 1.5%. So we're opening on a very weak note. So broad sell-off in the markets. We saw oil and nat gas open and spike higher, significantly higher. Interestingly enough, nat gas has retraced that entire move. Oil has not. So we're going to jump into those charts. We're going to take a look at some potential opportunities. Before we do that, I do need to share this disclaimer that trading involves risk. It may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And you can here you can see that spike opening higher in oil and retracing a little bit. In the nat gas, it's come all the way back. I mean, that's what's really rather interesting is the disparity between nat gas did that spike higher and has since it's actually might even be lower. Um, Interesting dichotomy between those two because we know that the Russian markets impact both those gas markets. But Brian, I'm going to flip it over to you because there are a lot of other headlines coming out that are really
Yeah.
rather interesting that can impact the markets.
Yeah, there's a lot of things going on. Mondays are always interesting mornings just because you're playing catch up from the weekend. On Friday, I mentioned expect a lot of gaps on Sunday. There was definitely, I think pretty much everything gapped. And there was a lot of retracements on those gaps. So just your standard play, I mean, if you handle the gap like a large candle, pretty much everything was a parabolic retracement trade. So very, very easy to trade if you know how to do that. If you don't know what I'm talking about, go to the YouTube page for Nadex and just search parabolic retracement. You'll see webinars that I've done. I think I've done 2 or 3 of them. I know at least one of them is up there. Or go to the webinar section on the Nadex webpage. So far this morning, some of the big headlines we've gotten. One of the major things that we're seeing, obviously, oil has been a story for a while. Oil, if I look at the chart real fast, you can see that oil had a very nice little pop from the 92 range all the way up to the 98 range, and now we're back down in 95. So it has not retraced fully. It is pretty decent, from where we closed. It is kind of hovering right now between the 23.6 and the 50. So we're kind of in that middle area right now. U.S. traders coming online, and again, a lot of the prices in oil is really based off of U.S. demand. One of the headlines that we've seen this morning already, which has probably led to the decline a little bit, was this a message that this week the EIA members may agree to release 70 million barrels of oil from stockpiles, according to sources in the Wall Street Journal. So again, that is increasing supply. Remember, a lot of the sanctions we've seen thus far, energy sanctions, have all actually been coal, not necessarily natural gas or regular petrol fuel. So haven't seen those sanctions yet. And again, a lot of this is being driven now. This morning, actually, again, you guys know I bring my sons to, basically I have to drive them to a school so they can go to a local IB program here. they were actually interviewing people this morning talking about how our production is ramping up. By the end of this year, the U.S. will be producing pretty much the most, more than Saudi Arabia as far as oil goes again. That we're not at our peak right now. I think they said our peak was like 13 million or something like that, or I forget whatever it was, 16 billion barrels or million barrels, something like that. We're not at our peak yet, but by the end of the year, the way that things are ramping up right now, we will be back at what our peak production was, and we'll be kind of the global kind of predominant, basically oil producing country again. So, again, comments like that when they're talking about that is not necessarily the best thing for oil. But again, oil is being driven by the U.S. trader. Right now, with it pulling back, we may have some more opportunity to go long, but kind of watch it. Whenever you see a gap, particularly up in a range like this, right past $98, the reason it stopped there was because sellers stepped in. So that's kind of one of those new levels where we need to kind of just kind of eyeball it and be like, hey, listen, there's something going on here. Price was not able to gap past it. Sellers stepped in there, so kind of keep that on your radar. As well as on the other side, make sure that you're marking off kind of the bottom side where the gap initiated from. That's where the imbalance in price happened, right around $92. So it gives us a $6 range, but again, that could be our range for trading this week. But I did mention Friday, look for those big gaps, and again, it's a way to play kind of a longer time frame weekly position. Even just in the overnight, had you traded this gap once it started to close down, and even with this retest, you've already had $5 worth of movement. You're already starting to blow some of these contracts up on a weekly basis. So some nice play in oil. Other big news we've heard, and I guess I'll start off with kind of what we heard from the Ukraine over the weekend. Basically, the Ukraine is, again, the big issue is from the Russian standpoint is NATO expanding, taking over adding the Ukraine to it. Well, the EU is also a very large organization, not militarily. It's more of a financial and kind of trading based organization, the ECB. But Ukraine is, the comments that came out of there from the German chancellor is Ukraine is one of us and we want them in the EU. Ursula von der Leyen tells the Euronews. So basically, at this point, the EU has said that we're not allowing Russian aircraft. We have, sanctions. And now they're saying that, hey, listen, despite the backing of this for membership, she gave no indication of a rapid, but there's now a policy in that they could have a rapid adoption into the EU, and now any attack on an EU member would again, not only economically but militarily be justified because it's attacking an EU member. Zelensky this morning has also said, hey, listen, we need immediate membership. We need immediate access in. Now, there are some peace talks going on, and basically the peace talks are kind of, they don't want to do Belarus because Belarus is kind of a bad thing at this point as well. But Zelensky, I'm saying his name wrong. Zelensky. I think I'm saying that still wrong. But anyway,
Zelensky.
Yeah, he basically has said, listen, we want an immediate ceasefire. And everyone's like, Russia's not going to do that. So that's what he's going for. So again, this would be a very, very big deal if all of a sudden they were backed. And again, there is a provision for this emergency accession. It could be absolutely huge. And again, even beyond this conflict, if the Ukraine was suddenly part of the EU and trading on the euro, this could be absolutely huge for the economy. Huge. So this would be a great step for them, Yeah. But it would also, again, as long as once an EU member is attacked, all EU members are attacked. So it's kind of like NATO, but more of like a financial kind of agreement that they have there. But it's the same thing. It would affect the economy. And
everything over there. In fact, there was the other headline that you mentioned because there's one country that remains totally.
I haven't done that yet. Yeah, that's next.
That was
that came out minutes ago. So before we started,
blew my head.
Yeah, right before we started, we got this headline. The Swiss government adopts the EU sanctions on Russia, freezes assets of targeted people and companies effective immediately. The Swiss is always neutral. So this is crazy news that now the Swiss is actually getting involved. And again, there could be a number of reasons. You always want to remain neutral because you don't know who's going to win a conflict. But when you have the neutral party saying, yeah, we agree it's bad, that kind of means that they're looking at this as Russia is not doing well. And again, everybody's giving weapons. Russia has claimed air dominance, but but everybody else is like, you know what? We've been sending them anti-air missiles like they're Tic Tacs. So there's been some data and some figures. We've seen what the losses have looked like. Again, I don't know how much of it's verified, not verified, but according to some of the larger programs, they're saying even like 4,200 tanks have already been blown up, and you're seeing videos of blown up tanks, and they're blowing up tanks and they're watching they're on their cell phone like, check this out, guys, and it's like boom, they're blowing tanks up. So there is fight. There is definitely fight. They said that right now we cannot put boots on the ground because it would be two nuclear powers shooting each other. Which, again, with the comments we've heard that Russia has now mobilized their nuclear forces and they're on high alert, waiting for us to do something. There's a
That's
lot
my
out there
biggest
that's going on.
concern.
But when a neutral country like this does the same thing, it almost it's almost getting to the point now with the comments, and again, he's gone above and beyond what we've seen. Now mentioning, the nuclear aspect. I mean, I understand why he says that, and that's always been he made the threat before about it, and yes, it kind of keeps people's hands, but I don't think at this point he's going to be allowed to stay. So it's almost going back to the whole. You guys remember like the Iraqi War? Remember what happened with Saddam, where it's like his administration needs to be removed.
Yeah.
Is the populace going to do it? I mean, like, is the public going to do it? Because as you mentioned, this is big news as
Will the
well.
military do
We're
it?
talking about, are we going to raise interest rates 0.25 or 0.5? Is that going to be too much? They went from 9.5% to 20%. Could you imagine right now in the United States if we even went to like 2%?
Oh my God.
5%. We would there would be riots in the streets. So they went up to 20. So this is one of those things. It does hurt it is hurting the general citizen at this point. So
And he doesn't seem to care.
yeah, I mean, they obviously knew that sanctions were going to come by doing it. Everybody had said they were going to put sanctions. The question is, were there forecasts of what the sanctions going to be? Is this living up to it? I mean, China has already said, we'll buy all your gas, we'll buy your wheat, and there's been increased trade, and they are BFFs now, definitely without a doubt. The question is, were there forecasts of how bad the sanctions are going to be? And they said, yeah, these are hard sanctions, but we have ways and the potential to go around them so they don't hurt us that bad. So remember, everything they do is there's going to be initial response and then a pushback, and a response and a pushback. They did the 20 to be extra cautious? Maybe. And then maybe it comes dropping back down again. I mean,
or
who knows? It's still too soon to tell.
Let's run through.
Obviously, oil's a big one.
Yeah. I mean, we did oil.
All the indices are obviously something we need to talk about. They all gap down. And interesting enough, we talked about, in ES last week, we talked about a level up there at 43.81. You can see we closed right at the 43.81. And then we gap down from that level. Now, again, I said that this is not a weekend you wanted to trade over with a lot of things going on. The other side of this position is at 42.43. There was some touch there. We kind of missed that by a little bit, but it did kind of turn right where some buyers stepped in for this big push. So, again, on a technical basis, it should have gone down. Should it have gapped that far? Not really. I mean, there's no way to kind of prepare for that, but it did go that level. What that shows us is that, again, if we're able to rally back up, 43.81 should be the sell area. I think 42.43, at least in ES, is a decent level to buy. And again, this is where your profit target for shorts should have been. And that's exactly, if I move this, that's exactly what we bounced off of. That's not straight. It's right there. So it did turn where buyers were. And again, that should have been your downside target before a re-entry on the downside. Not being flat will drive me crazy. But I still think as far as tops and bottoms go, there's a decent bracket in there. And really, if we go fib-wise, if you're drawn to the bottom, you can see that really the fib levels are not really holding, particularly in the overnight. If you take the larger kind of spectrum up, it's kind of the same thing, right? If we go high to low, it did gap all the way down to the 78, came all the way back to the 23, and now we're kind of just chopping through. So I think the big question on this one would be is if you drop it down to a 15, do we have any type of decent levels? Right now, it's just so choppy back and forth. You really don't have a lot there. So I think you need to kind of set an alert top and bottom of the 43, kind of see what the opening print looks like. See if there's at like 915, 920, see if there's a pullback to any of these levels. I mean, there's a bunch of small ones. I mean, there's a tested one sitting right in there. Unfortunately, we got to use the top, and it's 3 candles, so it's okay. But see if we pull into any of these two. Like I said, increased, sanctions, and again, the retail trader hasn't gotten to kind of deal with the most recent update. So we'll see what that one looks like. NQ also had it. We had talked about 14.114. Kind of hit it and dropped, hit it and dropped, hit it and dropped. Then we closed right above it, and then bam, we gap much lower, and it kind of went in kind of a no man's land area to reverse. So I wouldn't necessarily worry about too much. But I think if we adjust this around, I think your clean entry up top on this one. Yeah, cleanup is probably going to be 14,223. Remember, this is a little bit funky right now because again, it's blocking semiconductors, right? But we're not blocking other things. I would say with the way that this is chopping back and forth, kind of in a little bit it's not giving us a clear direction, but kind of the same thing on a 15-minute chart. We have a level right below that was tested one time, and on the top side we do have descending candles, but again, it's a much more compressed zone, so we need to be cautious. And right now we're literally sitting right at the 14,000 mark, so it's using that as kind of a base point. YM, same idea. I mean, this was the open last week. I think right now from where we opened last night, we're kind of still stuck in the same sideways range. So I think marking off the top is probably a decent level. Look for that. Whoops, go to here. Let's go this and price. I would say up. Whoops, this would be red. And then downside, I would say kind of the same level, and this kind of gives us our bracket top and bottom, right? So 33,227 and then 33,947, and then Russell, same thing. You guys, we talked about it last week. The 20, basically 2040. That's exactly where we closed. And what do? We gapped down. It went all the way down and it grabbed the same type of testing level. And again, you can see it didn't get close to the 50. It sliced through the 23.6. And again, what did it do? The level of basing that was a confirmation is where it bounced here, and then there's your parabolic retracement trade. So remember, for gaps, you could handle this as just one gigantic candle. And again, there's your parabolic retracement move back again. So it's a little bit more tame right now, but I think definitely watch the top side of this one still, that 2040 level. And then downside, again, it's halted it twice, but it's still probably a decent level to watch for later if we can get down there at 1947 or 1975 is probably the best. So yeah, a lot going on. Look for more headlines. And then again, tonight, don't forget, we really don't have anything else, Chicago PMI. Don't forget, tonight we have the cash rate and the RBA statement. It's not expected to change the Aussie interest rate, but it doesn't actually have to change the interest rate. All they have to say is, we're going to raise it next time. We're ready to go. And that's it. Boom, the market will adjust and we'll have some strength. So right now, the Aussie dollar is up 72 already. Again, we kind of have dollar weakness right now going across the board. That should reverse today. Should be a good one. And again, it's the news release is at 10:30 p.m. Eastern time, so it's too early really to look for it right now. We're talking about something that's 13 hours away. But these are great trades. And again, everybody else in the world is raising. New Zealand is raising again. Canada says they're going to raise. We know that the U.S. is definitely raising at least 0.25, maybe,
Yeah.
Aussie is next.
At this point,
so some good opportunity there. And again, if the volatility is not bad, look for call spreads tonight. Small, 2 hour, the 10 to 12 call spread, or any of the 2 hours are fine for those at night.
Perfect. No, I appreciate it. That's a good to look forward to that potential trade this evening in the Aussie. With that, any questions for Nadex, please email us customerservice@nadex.com. Questions for Brian, you can email Brian at support@keeptradingsimple.com. My email's up there as well. If you'd like to reach out, well, we all answer our own email. We're here to help any way we can help. Please feel free to reach out to us. Again, just to recap, I mean, it's all headline driven markets again with the war going on in the Ukraine with Russia. Look at those opportunities in oil and the equities. Some great levels there that Brian called out as potential places to look for entries and exits with the volatility that we've got going on in the markets. Brian and I will be back again tomorrow morning. And until then, try not to do what I did and stay safe. And good luck in the markets. Oh, and look at that. We got a surprise.
She just walked in. Yep, she just walked in.
And we've got Jen.
Sort of. It's only half Jen. She's still,
She's still sleeping. All right.
Yeah.
Well, we'll let you go take care of her. All right. Hey, everyone. Thank you so much for joining. If you like what we're doing, please drop a like in for us on Facebook or on YouTube. We do appreciate that. We will catch you again tomorrow. Good luck in the markets, everyone. Thanks.